Now, before we go into the broader market that we've been talking about, when we look at the distillate market, gasoline market, we need to talk about OPEC, because OPEC met today and they increased the production by 648,000 barrels a day in July and August, which essentially just takes away September. So they really didn't do much outside of pull forward some of those increases. So realistically, when you think about where did the 648,000 come from, instead of doing increments of 432,000 over 3 months, you're just doing it over 2 months. So you're getting some of that increase, which is, again, coming into the market. But the problem is you have countries that haven't hit those levels, even these reduced levels. So for an example, Nigeria is now allowed to go from 1.77 million barrels a day to 1.79. They haven't been above 1.5 in God knows how long, which I can show you. But again, it's just a matter of because they can't sell their oil. That's the biggest problem. And I know there are people out there that keep talking about, oh, well, overcompliance. It's easy to have overcompliance when you can't sell your reduced volumes. And you have to consider that supply-demand metrics on the underlying physical. Because when you look at Asia, who's a large buyer of Angola and Congo cargoes, as well as Nigeria, they are purchasing, especially China, they've been purchasing discounted Iranian as well as Iranian and Venezuelan crude. And now they have a plethora of Russian crude. So they already weren't purchasing Angola and Congo because they were taking more Iranian. And now you have even more Russian that is cheap that nobody can take outside of Asia at this point. So why am I going to buy more? So that's going to put more pressure on the West African side, which should then shift into the US and the European markets. Now, on the flip side, they have been very sticky on what price and what discount they're willing to give, or lack of a discount, if you will. So it's this back and forth in terms of, okay, well, who's going to blink first? Because Nigeria, if they want to try to capture obviously where prices are right now, they're going to have to cut pricing. But cutting prices is still going to be over $100. It's just they're leaving stuff on the table, and that's leaving a ton in floating storage. Now, there's some expectations that Saudi Aramco may increase prices to Asian customers by $1.50 a barrel from a month earlier, but again, that's not something that they should do, but it doesn't mean that they won't do it given where floating storage is, because floating storage is elevated in the Middle East. So typically it's where is storage, and then what are they planning to do? So as storage remains elevated, that usually helps or causes them to mute some of those increases, because there's typically an increase in July. That's not unheard of, because they want to hold more back in the system because they use it for burning. So again, there's some back and forth in terms of some of the different places there that we need to look at. But overall, so Russia's gone from 10.66 million barrels a day to 10.833. Again, they're not going to be able to do it. They're not going to be able to hit that number because there's, only so many places that can take this crude, and they're going to try to get as much of it out as possible, but it's not going to have anywhere to go. Now, I do expect Iraq, Kuwait, Saudi Arabia, UAE to hit their levels, just because they're in a great position where they can be a bit more flexible in terms of pricing. They have a higher distillate cut than others, which again, it's just going to put them into a more favorable light, which will be something. So that's why when you look at what happened, it's really nothing has changed. You're still going to get over compliance. West Africa is still not going to produce what they're allowed to. The Middle East will produce what they're allowed to, and Russia's going to just dump as much crude as they can into the market to keep things flowing. Now, one of the other key pieces is the Russian minister met with their Saudi counterparts and the other GCC counterparts, and you might think, well, what happens when the deal expires? And realistically, the deal has been fantastic for Russia, but they were coming from a point of strength. Now they're coming from a point of weakness where sanctions are biting, not so much in terms of just getting the crude into the market, but maintaining that production. They can't get technology. They can't get chips. They can't get labor from, the U.S. and Germany. They can't get key, high, important pieces. So how do they do that besides back channels coming through some of these OPEC nations? Now, Libya continues to have their own issues when you look at the different pieces. When we're discussing the problems, if you will, on just the pipelines, they had to take about 300,000 barrels a day down because of the pipeline leak. As that gets fixed, they'll come back up. But again, we don't see them anywhere above that 1.1 million that they're currently at. Now, one of the key components before we go any further is looking at the Singapore-Dubai refinery margin. Now, the middle distillate side is the one that is driving the show. So you're going to do everything you can to try to get those middle distillates and to keep that coming through in general, because there's such a great value there. And that's where we're going to continue to see things coming through. But gasoline is a bigger and bigger problem as this continues to be the focus, because as you make middle distillate, you inherently make gasoline, and gasoline still remains grossly oversupplied and at a record level. So when you think about where we are on the diesel versus, and obviously where diesel is in the market in general, but also middle distillate in Asia, we have to look at, where's Asian floating storage? So here you can see that Asian floating storage still remains elevated. We had some drawdown as, again, those cargoes, as you have China getting back to normal, reopening some of the ports, you're going to get some of that coming off the water back into the land storage, and that's going to be a fairly sizable move, as this will remain again elevated but coming down, because you do have a backlog of product coming in. It's just a matter of how far is it? Is it slow steaming? Where's it going? And with a lot of it coming a fair distance, that's again going to weigh in terms of how much of that comes through and how quickly. But we do expect Asian floating storage to remain elevated. Now, this is what we were talking about with West Africa. West Africa still has a record amount of floating storage in the market. So yes, you can tell Nigeria they're allowed to pump more, but why? I can't sell what is currently available, so it makes things way more difficult when you're looking at that movement of product, that movement overall. So then when you look at China super tankers, you can see that it's starting to increase again, and that's where you're starting to see that come up. You had that drop down. Now, as things reopen, things are coming through. That again is increasing some of those different pieces, and that's remaining a bit elevated. We do expect that to be obviously below 2020 levels, but still remain elevated and still stay at that higher end as you have more cargoes. And it's not so much that you're going to have a huge shift in cargoes. It's just as the miles per ton increase coming all the way around from Russia, there's just going to be more ships signaling China at one given time because of the length and the distance. So it's not that they're getting this huge wash of crude. It's just there's going to be more ships that are going to be spaced out that are just going to have their signal tied to where they're delivering into China. So again, that's going to be a bit more on the elevated front. Here you can see that we've had that increase in Shandong refinery utilization rate back to about 61%. We expect that to actually flatline and dip, hanging at the very low end of that, if not below that cloud, just because as they pull back on the SOEs, they'll also pull back on the Shandong or the teapots, just because there's a significant amount of refined product in storage. And even though things are getting back to normal, you're not fully back there, back up and running. So as you see more of this crude coming off the water into land storage, you're not going to get a huge pull from some of this flow. Now, when you look at global crude oil on the water, it's at a record, obviously below 2020. But you can see global crude oil on the water is at a record, and it's going to stay at a record as you have more crude in shipment, in transit, as well as in floating storage. This is not going to change, especially as you have more crude going from Russia and staying on the water longer, trying to get into the Asian markets. So that's why when you look at crude oil in transit, you're shaking that off where you typically get that drop. You're actually getting that increase, and we're going to stay at these records And as you know, obviously 2020 had a huge drop. We're going to take that out and we're going to stay setting new records because of the amount of crude that is going to be on the water at one time, driven by the miles per ton. All the while, when you look at global floating storage, we're you know, that little dip right there is where we're technically above 2021 levels. But you can see that we're just going to stay elevated. We're going to stay at that elevated level. It's not going to be 2020 levels, but you're going to see that as you have more crude getting stuck, timing, trying to manage that, we just have more crude in floating storage. So when you start looking at, well, why is OPEC not actively trying to increase the amount they're producing? They're looking at this and saying, well, just pull down what's in storage. You know, why are you going to buy more from me? Why is this in floating storage? And the issue is there's answers to this is because you have the wrong type of crude in storage. The issue is there's a distillate shortage, not a gasoline shortage. So you need a specific cut. You need a heavier barrel, and there's just not as much available, which is why, as I said from the very beginning, the Keystone Pipeline was very important because it was going to bring a highly desirable type of oil into Pad 3. And that's, again, some of the big components that we continue to see. Now, U.S. crude product exports, you can see that gasoline remained elevated at 289,000 barrels a day into the market. A lot of that going to Latin America, 472,000 above the 5-year average. Distillate is the one that surprised me a bit. You had an increase of 229,000 barrels a day. That's 258,000 above the 5-year. You know, we've seen a big drop in the amount, and big drop, something closer just below the 5-year average going into the international market. And that continues to be the case based on the ships that we're tracking. So this could be a little of a lag time in terms of filing. But again, we do expect the distillate fuel oil exports to fall. And then when you look at propane had a drop of 299,000, but that's still 307,000 above the 5-year average. So still a great move. And then even crude oil exports dropped 351,000, which came in just below 4 million. So you're still at a very strong, good spot. And that's something that we again believe is going to continue. We did get a drop into the European markets from U.S. crude exports, but it's still elevated, it's still high, and that's going to remain the case. So gasoline had that nice spike coming back to the highs. We said last week that we expected to be above the 5-year average and at the high end of that cloud. Again, this is obviously breaking above it, but we do expect to remain at the top end of that cloud as more of it goes down into Latin American markets. Then when you look at distillate, so we were expecting to kind of hang right at that 5-year average. You can see that we spiked back to the highs. We expect this to fall down, but stay at that 5-year average and hold that pretty fixed going over the next few weeks. Ethane exports can't stop, won't stop. Again, we don't see that adjusting at all. Crude, you can see still remaining elevated. We don't see that adjusting. You can see that we're at about 3.683 million barrels a day of exports going in. This is the 4-week rolling average. We expect this to, my view is at 3.4, 3.5. Maybe it's 3.5 to 3.6, but again, I think 3.5 million is that right number on the 4-week average. Now, when you look at propylene, again, just LPG is going to continue to be in high demand, and we expect that to continue to go into the broader markets. Dubai's, so we had a nice little spike to 15. Now we're back down to about $11 of the swap between where Dubai and the Brent are. Now, the last time we were here, this was the impetus that drove Saudi Arabia and the other GCC nations to increase pricing. But the moment they did that, there was a sizable drop that came to about that $5, $6 mark as they did it. And the concern is, well, you still want to be competitive. You don't want to shock the market. So I do think we'll get an increase. I just think it's going to be a bit more muted than what the expectations are in the market for fear of sending this back down, getting more crude locked into floating storage, as we saw that happen when they raised prices to that level, especially where current floating storage is right now. Refinery margins back to the highs, breaking to new all-time highs. The Dubai hydrocracking refiner spread, again, is leading the way. It is all being driven by middle distillate, and we'll talk about that in a minute. And this is just looking at that hydrocracking separated. You can see that back to the highs. Obviously cost is up, but also there's a shortage in diesel. There's a shortage in middle distillate, and this is going to be the key way to make that. Now, here's where we look at some of the different pieces. So we've had some decent premiums come in now. You have some offers. And as we've said the last many months, the beginning of the month, you get countries and companies trying to tag the highs. So they're going to, like Nigeria is at a $4 premium, and they're going to put it at a $4 premium, and they're going to shave away those premiums as things don't move. If they start to move at, let's say, $3.15, they're going to hold at $3.15 as long as they can, and then come down as, again, things start to adjust. But when you look at Nigeria, in June, they were exported 1.227 million. They were allowed 1.7. Now in July, they're at their loading schedules at 1.347. They're allowed to pump 1.79, but they're not doing it because they can't sell this reduced number. If they could sell this reduced number and clear it out, they would start to increase that production number. They're just not getting it. So why rush to do it when they have their own issues? They have storage. It's expensive. That's going to be the key. And then when you look at Russia, we expect that to go to about just over 4.2 to 4.5 million barrels a day. Everything else is fairly in line, but West African crudes are trading at a fairly sizable premium right now, but they're offered there. It doesn't mean they've crossed. And it's going to be important to see where do they cross, and as they bring that number down to see what is the right number, I think that's going to be key, especially who are the buyers. So Genscape, so European crude is at a 2022 high. You can see it's above where we were in 2021. It's above where we were in 2020. And again, it's continuing to drift up. We expect it to continue to move along those seasonal levels higher. But when you look at it, gasoline, big build, 168 tons. But then when you start looking at gas oil, it was a 35 ton draw. So again, when you look at that number, it's at a near record low. The only time it was lower was 2008. So you're still seeing a lot of that demand, a lot of that pricing coming in. And this is where, when you look at gas oil, when you look at middle distillate, you have some of those shifts, but when you look at gasoline, you're at a record number. So obviously, when you look at 2020 was higher, but when you look at where we are right now, we're obviously taking out 2020. We're at a record number and growing. And that's something where we had actually went above 2020 levels, and we expect this to continue to drift up towards 2020. And they're going to use the export market to balance this, with the U.S. and PADD 1 being the natural home for this key product. While fuel oil is going to stay fairly middle of the road, we don't see that adjusting up or down. There may be some additional demand in Asia, just as middle distillate pricing prices people out, and they go towards the heavier cut. So then when you look at Singapore, here you can see that the Singapore levels are fairly in line with the 15-year average. When you look at total stocks, we expect it to be fairly fixed in this point. We don't see it up or down. And the reason why is because you're going to have light distillates at an elevated level, and you're going to have middle distillates at a very low level. And that spread is going to keep us right dead center where we are right now. And here's just the backdrop of it. So light distillate, we're even above the 2020 levels, and we're making new all-time highs. That's because demand remains fairly soft, but at the same time, they're throwing off a decent amount of gasoline trying to make middle distillate. And this is going to continue to plague some of these guys as they look to, okay, well, there's a great crack. It carries everything, so I'm going to make as much of that as possible, but where do I put my gasoline? And that's where you look at that long diesel, short gasoline side in terms of where some of those metrics reside. Then when you look at why we're talking about middle distillate, new all-time low. So you have light distillate all-time high, middle distillate all-time low. Again, this is where we're getting some of that disconnect as we have resid and heavy disti sitting middle of the road, and we expect that to remain the case. Now, when you look at Fujairah, there was a small drop of 123,000 barrels, and that was there was a build in middle distillate, while light and heavy had a small draw. So light distillate had a small drop of 287,000 barrels. East of Suez gasoline market was seeing some strength as restrictions adjusted. Sri Lanka's been a buyer, but again, we expect light distillate to continue to grind up. Middle distillate had a build of 228,000 barrels. The gas oil market was obviously finding some support with the EU putting in the sanctions. So again, that's going to send more of this middle distillate from the Middle East into the European markets, into the Atlantic Basin, as the stocks of heavy resid fall 64,000 barrels. But again, it's just going to be fairly stable. It's really the light to middle distillate that you're going to see that battleground. So when you look at Brent spreads, they're down to $2.61, and by down to, I mean, we're still at these highs, and this is, again, helping to support where the current paper spread is at the moment. Then when you look at North Sea crude floating storage, you can see that nice little spike. A lot of that is being driven based on some of the pricing. Prices went up in the North Sea, so that left some more in the floating storage. As they try to find some of this balance, you'll see this come down, but it's again stay towards the 5-year average. Middle East, so obviously taking out 2016, which would be that elevated level, we're at seasonally adjusted highs, and so this is going to be the concern because we're coming to the highest levels we've been at in 2022. So it's going to be difficult to raise pricing while you're seeing your crude get stuck in floating storage. Now, a lot of that is also being driven by Asia, where Asia's looking at this and saying, well, I can pull down an extra 4 million, let's just say, let's say 1.2 million barrels a day of Russian crude. So I'm already not buying West Africa. Well, I'm going to buy less Middle East. And that's where I think you're going to start to see this kind of battleground of, well, how do we now kind of compete against Russia given where the discounts are? And that's going to be some of that pitfall and shift that we're going to have to look out for as European floating storage, continues to remain fairly elevated. And a lot of this is just timing between onshore and offshore. So that's what we have for you today. If you have any questions, please let us know. You can find me on Twitter in the comments section. And otherwise, have a great day. And thanks for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.